Our favorite Nigel D'Souza is here to tell us about the stock that he's looking at today. Nigel, take it away.
Well, Sonia, the stock that we're focusing on today is Oriental Carbon and Chemical. Just request viewers to really listen to the full story, and then, in fact, they can take a call with regard to the stock. But to take you through first, what does the stock do? They're the sole domestic producer of insoluble sulfur. What is insoluble sulfur? That, in fact, is the product that's used as a vulcanizing agent. That means that when you want to convert natural rubber into a product you want to use, this is really very, very important. If you just take a look at natural rubber, you'll require around 1.5 kg of insoluble sulfur when, in fact, you're using around 100 kgs of natural rubber. So that's really the background of the company. In terms of global production of tires, you'll see that that's likely to grow by nearly around 20%, 22% in the next few years. That would mean that, in fact, you require close to around 28% of insoluble sulfur. So that, in fact, is the consumption story. That's a tire consumption story. Let's pull up the next plate. It'll tell you that the demand of insoluble sulfur will be nearly around 28%. So no big supply-demand mismatch there. In fact, there'll be more demand for insoluble sulfur. Moving on then, there are only 3 big players currently. The big one is from the United States, that in fact it's Eastman. It has 80% market share. And we have OCL that has 10% of the market share. And that's another Japanese company that has another 10%. So only 3 big producers internationally. Now, OCCL has planned a capacity addition. And that's what will take their capacity from around 23,000 units currently all the way to around 34,000 units. So in the next few years, in fact, that's what the capacity addition will look like. They were only around 5,000. They became 12,000. Now, in fact, they're looking to up it to around 34,000 or thereabouts. The key reason, really, Sonia, why they want to do this is because radial tires, they require more amount of insoluble sulfur. So that they could capitalize on that. They can also look at the North American market where they haven't really capitalized till now. And also, there are high entry barriers. So that as well will favor them going ahead. Looking at the financials in the last year, there was a bit of a dip on the top line, but the margins were maintained. Some of that is really a crude derivative. So that's why, in fact, there was a dip on the top line. Crude prices fell. That's why realizations got hit, but margins were maintained. Profitability, though, was nearly around 50 crore rupees. So just to derive that, the stock currently is trading at nearly around 10 times its trailing earnings. 50 rupees, stock is at around 500 rupees or thereabouts. We just had a plate as well of their big customers. So all of them, really, almost all global tire makers, they do take insoluble sulfur from OCCL. Finally, risk. Foreign fluctuation risk definitely exists because exports contribute nearly around 60-65% plus of their total revenues. Unrelated chemical diversification, that's a possibility as well. So that will not be taken very well by the trade. And finally, there could be volatility in sulfur prices as well as crude derivatives. So that could impact their margins. And finally, Sonia, you track the space very closely. One of the big global producers, that's Michelin. They, in fact, are not yet on their customer list. But fairly interesting stock. Keep an eye on it. Back to you.
All right, Nigel. Thanks a lot for that.